Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, June 17th. Mixed trade here overnight as we get closer to the pause, starting to trend a little bit higher. Corn right now is steady to two better, led by a new crop. Wheat prices range from a couple lower still in Minneapolis to 3 to 4 better in Chicago and Kansas City. Soy complex is mixed. Beans firmed up a touch, penny better right now, unchanged in the meal, while bean oil has backed off about 20 points. July bean oil did close up the expanded limit yesterday at 4.5 cents, triggering another day of expanded limits. However, it does not appear that it will come into play in today's trade as markets continue to react to the bullish RVO data from last Friday from the EPA. Bulls got an additional dose of friendly news yesterday with the NOPA crush data. NOPA members processed nearly 193 million bushels of soybeans in the month of May. That was a record high for the month. It was slightly below expectations, and it did leave oil stocks at only 1.373 billion pounds. That was about 120 million below pre-report expectations. This sent bean oil futures back up the limit the second half of yesterday's trade, with July closing up that limit. Spot board crush margins, they firmed over 40 cents a bushel since late last week. I've calculated them at $1.60 a bushel at yesterday's close. Bean oil as a percentage of product value has surged to over 49%, nearing its all-time high, just below 51%. New crop crush margins are now just over $2 a bushel. Right now, I think my best guess is that we're looking to add 30 to 50 million bushels of crush to the new crop USDA balance sheet, which is already a record at 2.49 billion bushels. Crop ratings yesterday, 1% improvement in corn to 72%, good to excellent, in line with expectations. Conditions improved in 9 states, declined in 7, while holding steady in 2. Overall ratings are in line with their historical average. Bean plantings, they advanced only 3% last week to 93% complete versus 92 a year ago, and the 5-year average of 94. Ratings did decline 2% to 66%, good to excellent, while expectations were for about a 1% improvement. Ratings improved in only 4 states, declined in 11, and held steady in 3. Winter wheat conditions there also slipped 2% to 52%, good to excellent. Expectations were for no change. Percentage of the crop rated poor to very poor, that increased 3% to 19%, as there was also a 1% shift out of the fair category. Despite the drop in ratings, they're still above their 5-year average. Conditions improved in only 3 states, declined in 13, holding steady in 2. To me, current ratings would suggest an average yield of 52.2 bushels an acre, well below the USDA forecast of 53.7, that in the June report here last week. Harvest advanced only 6% to 10% complete, the slowest in 4 years, and well below the 25% pace from a year ago. Spring wheat conditions, they also improved 4% to 57%, good to excellent. That was above expectations. Weather-wise, good rains overnight or past 24 hours in the Ohio Valley region and in areas in the western Corn Belt, central Kansas and Nebraska. Good rains this week, but we do have some extremely high temperatures with 100-degree heat as far north as central Nebraska as this ridge slides east. So will the extreme heat. Look for several days in the mid to upper 90s in the central and eastern Corn Belts. Deese and July corn inside trade overnight. So far, Deese has rejected trade below its recent low of 435. Beans look like they want to test their recent highs. Inside trade for wheat prices here in the overnight session. Thanks for listening, everyone. I hope you have a wonderful day.